Hi, I'm Catherine Gray, founder of She Angel Investors and co founder of the She Angels Foundation. I'm also the podcast host of Invest in Her and an award winning producer, author, and TEDx speaker. Our show, Invest in Her, features phenomenal female founders and funders. As you know, women receive less than 2% of venture capital funding. Our series is about accelerating the funding of women by connecting them to funding resources. Let's meet today's guest. Welcome to this week's edition of Invest in Her. I'm your host, Catherine Gray, founder of She Angel Investors and co-founder of the She Angels Foundation, as well as executive producer of Show Her the Money. And today on Invest in Her, we have on an incredible guest. She is the managing partner and founder at the Mezzanine Fund. Coming to us from Ohio today, please welcome Ann Richie. Hi, Ann. How are you?
I'm good. How are you?
Great, great. How's the weather in Ohio?
A little rainy, but we're used to it.
Okay, okay. Well, it's getting awfully hot here in California, but not complaining, just explaining. So we got the pleasure of getting to meet through some mutual people, and I want to talk about debt capital today because that is your area of specialty with the mezzanine fund, which we're going to talk about. And I also want to talk about what is debt capital. A lot of people don't know. They don't know it's a great way to finance their company, right? And I know you work mostly with like middle market companies, and we'll talk about what that means too. But first, let's talk about your background and how did you get into this? I did look at a little bit about what you've done before. Very interesting that you were a CFO of a private owned jet parts manufacturer. Also, for 20 years, of course, managed distressed portfolios for companies such as, Wells Fargo, Citicorp, KeyBank. So tell us all about that and what brought you over to this particular area of finance.
Okay. Yeah, so I was actually my first job was as a bank teller. So I was I've been a banker for a long time and I worked in the area of banking, very different from new loans. I helped companies that hit a bump in the road and had trouble repaying their loans. So did a lot of bankruptcies, restructurings, liquidations, and really meeting companies that are trying to get over either loss of a customer, loss of a market, or something went wrong, and they were having trouble meeting the terms of their debt obligations. And it
So
was
you
actually
would help them get over that so that they
yeah.
could move on and continue the business.
Right. So it's a lot of close work with middle market companies. So I was dealing with owners. Sometimes I had a couple of large corporates where I would be dealing with professional management, but just really working in the weeds with companies to try to figure out how they can survive and meet their obligations. And I did that. I did that for a long time. I loved it. It was a place to be very creative. Everything bad had already happened, so I could be the fix-it person. And really, as a woman, it was a great place to be because I did not have to grovel for business. They needed me as much as I needed them. And I think kind of back in those days, they knew they weren't going to see me at the country club or at the golf outing. And so I think there was a lot of ability to build trust and really truly build relationships.
And I think like what you're saying too is they didn't want somebody in their circle because this is like a
Yeah.
personal, private thing, some crap that you're going through. You don't want everybody to know your personal business.
Right.
And then you kind of came in as a savior. I could see how that could be kind of a fun
Yeah.
position to be in, that you actually help them get over this hump and
Right.
then flourish. So how did that lead you to what you're doing today? And let's talk
So,
about what you're doing
I
now.
would probably still be there, but a guy I worked with at Citicorp, he started a private equity fund, and every year he'd call me, got to come work for me. So one day I said yes, and I was the chief restructuring officer and chief financial officer for a jet airline parts manufacturer. So it was my first time on the other side of a workout, trying to figure out how to make this company survive. It was 2008, so it was a tough economy. Uh,
Right.
very, very regulated industry because we made turbine airfoils that kept jet engines, that kept planes in the air. So we had a lot of oversight by the government. At the in the end, we had three customers, and they all GE, Pratt Whitney, and a French company. They all had the ability to do what we did. So the value proposition wasn't really there, which is probably why it was being spun off. But we closed it down, and after that, I was like, I think I'm done working with dying companies. I'm going to try working with startups. And that's when I got into venture. Very quickly, I realized venture was um, not the ideal capital tool for women and people of color, just because it kind of extracts value in favor of the investors. And so that's how I decided to start the mezzanine fund.
Right. Right. Okay. Well, tell us what the mezzanine fund is and what you do.
Okay, so we are raising capital to provide loans to businesses. I call them the overperforming but underfunded businesses, and these are lower middle market companies. So they might have revenues of 5 to 10 million, but they need that flexible capital to get to 50 or 100 million. So it's
And it's so
very
funny you say 5 or 10 million, and a lot of people would think that's a lot. Uh, but that middle market has the hardest time getting from 10 to 5 to 10 to 100 million. And there's a secret sauce in that, and I think you're part of that solution, right?
right, and they need so we are debt. So it's a contractual relationship. We want to get repaid. We don't take equity. I feel very strongly that if you are a entrepreneur that has gotten your business to 5 million, um, talking about taking a piece of equity, those conversations sometimes don't go well. And there's also huge difference in what I might think your business is worth and what you might think it's worth. So we just make flexible loans, and we say flexible because we don't require interest or principal in the early years. So these are companies that have a great growth opportunity, but might not be able to cash flow early in the term of the loan, and banks would not consider funding them. So we are a little more expensive than bank debt, but we are a lot cheaper than equity. And I think especially for women, it allows women to keep the ownership, which I'm a huge advocate for the ownership. And
Yeah.
so,
And they say it's
um,
really hard for women to get from Series A to B or C. It sounds like you're a catalyst to that.
hope to be, yes,
Yeah,
yes.
hope to be. And so the loan would be a little bit more than a bank, but they can't get it from a bank.
You can't
So,
get it from a bank. And Catherine, I am shocked to see how many $5 million revenue women-owned businesses still use credit cards, factoring arrangements, or they use, Stripe or their payment method, fintech, but the rates on those are like 25 to 40% interest.
oh
Um,
my gosh.
And so
Wow.
we're trying to come in there and make the difference. And there's really strong data about how women pay more for the same capital with worse terms. And so we're trying to fix that all in one shop.
What you're doing is incredible. What a great solution. Now, banks might be the lowest, but like you said, if you can't get a bank loan, where are you going? And you don't want to give up too much equity in your company. So, what you're doing with the mezzanine fund is an alternative to those two.
It is.
So, they need to be doing a significant amount of business, but it's really a business that is doing 5 to 10, but wants to get to 1 million and needs the capital to do that, correct? Like for
Yes.
inventory or hiring.
Inventory, buy a competitor, maybe perhaps,
Oh.
expand your product line. So we fund what I call execution risk. So we're not startup risk. You already have a product, you have sales, you have customers, you have profitability, but you need growth capital. And so it's that capital. You would think a 5 million revenue business would not have trouble, but they really do have trouble getting that growth, the flexible capital. And so again, it could be to expand organically, acquire another business. Sometimes it's just used for technology. Banks don't like to necessarily finance hard or soft costs associated with software. But when you get in that 5 to 10 million, you can start selling to large corporate, but you have to have a very strong infrastructure.
Mhm.
And that infrastructure is hard to finance.
Right. Can you give me a ballpark of what the financing would be?
So, in terms of rate or structure,
Both.
okay, so our loans will be 5 to 7 years in maturity. Again, first couple years, no interest payments, no principal payments. Maybe the second couple years, you would start paying quarterly interest and principal. And then at the end, there would be a bullet that hopefully could be walked in and refinanced with a bank. So we're kind of de-risking the companies so that they are bank ready. And that is a goal. And the rates, rates are constantly moving and going in the wrong direction right now. But we will typically be, if you can borrow at 8% from your bank, our rates would be maybe 11 to 15%. And again, if you're talking about credit cards, you're talking about 20%. Uh,
Right.
Equity, if you get equity, you're talking about 40%. So we're cheaper, we're expensive debt, but we're cheap equity.
Right. And less expensive debt than many options.
Yeah.
So
I
yeah,
think another feature that I really like to point out is, you know, the problem now is companies say, okay, I'm either going to go for venture capital. When you can't get bank debt, they either go for venture capital or they'll go for just very, very expensive kind of hard money lenders. And I think what I don't like about venture is it forces an exit. And
yes.
I feel like, um, not to overgeneralize, but women sometimes usually start businesses later in their life. They put more of their personal wealth into it, and they don't always want to sell. They don't want to
Right.
buy and flip and buy and flip. Sometimes they want to build and hold. And so after we're repaid, we're happy. We don't want to force a premature sale. Whereas venture, you've got 10 years and the investors want their money back from that fund. So you're forced to sell when maybe the market says you should hold.
Right. So an ideal client might be listening is doing 5 to 10 million. They need some growth capital. They don't want to give away any more equity. They can't get a bank loan. That would be when they would come to the mezzanine fund to, like you said, use the capital to either purchase a competitor that was strengthen them or to invest in technology so they can get big corporate clients or whatever it is they need, maybe inventory. And do you work with
I
all
need you to do my pitches for me.
and to do this with all now, is it a specific genre? Is it CPG or is it all types of genre
Right.
business?
So we are industry and geography agnostic.
Wow.
That being said, there are certain types of companies that don't really lend itself. So if you are a heavy manufacturer, probably not a good fit. Um, we like service businesses. We will do consumer packaged goods, but again, most of our clients will probably be B2B as opposed to B2C. Um, but we're open to B2C. I think, my challenge is I have a vision of the type of company, but I also have to be very cognizant of the fact that women-owned businesses tend to be concentrated in certain industries. And for all the reasons we know, low barriers to entry, it's what we know. So a lot of food businesses, a lot of beauty businesses, which are great. But part of the goal of the fund is to build kind of boring middle market businesses that aren't necessarily consumer facing. We love healthcare. We like business services. I think because of kind of certain personality traits that women tend to have. I think we do great in service businesses. We do great with where there's a huge human factor. And so that's kind of what we're trying to fund. And in terms of the stage of the business, these businesses, the entrepreneurs are very, very aspirational and they are just starting to professionalize their management. So they might not have a CRO, a CHRO. They're kind of still wearing a lot of hats, and hopefully with our funding, they'll get to that point where they, have a more full-time staff and the business and the person are not as entwined.
I love that. I love what you're doing. You're really fulfilling a need, especially for women and people of color, LGBTQ, really all the overlooked, underrepresented communities in entrepreneurship that need that funding. And as you said, can't really access it from banks or venture capital. So bravo for the work that you're
Yeah.
doing. So
Yeah.
happy to inform our listeners about it. I think I have a lead for you already.
Yeah. And I will add that there's very, very, very strong data that women, people of color, immigrants outperform. And it's not slightly outperform, it's significantly outperform.
Yes,
Somehow
the
the
data
data,
does show that.
right, the data is not translating into capital opportunities. So we're here to fix that.
Yeah, it's a very overlooked opportunity. And I'm so glad that you're fulfilling that need and making that possible. It's so important that the ideas and innovations of all people get made because it will impact the planet significantly and in a positive way. So, bravo on the work that you're doing.
Thank you.
How do people find you, Anne?
The mezzaninefund.com is the website, and my contact information is there. Part of, I'm trying to change very, very old entrenched capital systems. And so I will talk to anyone because I like to be inspired and I like to create a path to get to my funding if you're not ready for it right now. So I welcome outreach because I think, sometimes capital decision making is this mysterious thing, and we're trying to make it less mysterious, more open.
Right. And before we go, like, could you share, and not to put you on the spot, but can you share like a story, a success story that makes you so happy that you do what you do?
Gosh, there's so many. One recent one is I connected with a company that does mobile testing. They do mobile healthcare testing, and the more I dug into it, it was like impact 50 ways. They hire they do STD, HIV, testing, and they end up hiring a lot of their clients who were formerly maybe incarcerated or formerly just struggling with health issues. And the more I got into and worked with this company, the more I realized how broad-based their impact was. And I never meet a female entrepreneur that doesn't have an impact story. And it's a little cliche that we're born do-gooders, but um, they hire more women, they pay them better, they offer better work environments, and so to me, it's such an easy fix.
Yeah, and
If
I think
you
that's
just
why they're more successful when they're given the opportunity and the funding.
yeah.
Yeah.
So I get excited and very inspired by the entrepreneurs I meet.
Yeah, me too. I love being in this space. I meet the most incredible women like you every day, and it keeps life exciting.
Yeah.
So, Anne, I take it you're on LinkedIn?
I am on LinkedIn. I am on LinkedIn. I hope to be very easy to reach. Yeah, and I do
Yes.
respond
So
to my LinkedIn. So just ping me on LinkedIn.
awesome. And for those of you just listening and not watching, it Anne, that's Anne, and
Yes.
then Richie, Richie. So Anne Richie, and of course you can find me, Catherine Gray, Catherine with a C, Gray with an A, on LinkedIn as well. And you can visit our websites too, which are sheangelinvestors.com and our movie site, showherthemoneymovie.com. Hope you all have had a chance to see that. That actually is a movie about the underfunding of women and how we can change that.
Mhm.
So you and I are very aligned on our missions here.
Yeah.
And
Yeah.
be sure to visit the mezzaninefund.com if you're a mid-market company or you know someone who is that needs funding to take it to the next level. And thanks so much for being a great guest. I
Thank
appreciate you
you.
taking the time.
Thank you.
Thank you, everybody. Make it a great week.